What's going on, everybody? Welcome back to the channel. There's been a lot of action in the crypto markets lately, so I figured we should talk about Bitcoin a little bit and see how you could have become a Bitcoin millionaire from using a simple trend following strategy. So what we're looking at here is a weekly chart of Bitcoin, and this green line that's kind of in the kind of where my cursors are at is the 20-week moving average. So what this simple trend following strategy is going to do is you buy Bitcoin when price closes above the 20-week moving average, like it does here back in June of 2015, and you sell when it closes below the 20-week moving average, like it does here in August of 2015. So here's our first example. So you would buy on that close above, and you sell on that close below. So as we can see, our first buy is going to be a loss, but that's alright. Then we come, and in October, price sets up again and breaks above, and then this is when Bitcoin goes on its huge run, and we don't see a close below the 20-week moving average for almost 2 years. We don't get our close until January of 2018. So that's almost a 3,000% move, and that's going to be a great way for you to compound your wealth. So then coming along, we do get a couple closes above, but these are after a huge downtrend, and it's something you can kind of pick up more. But this is really going to be our first buy over here in July of 18, and then immediately we're stopped right out. So then we come back. Bitcoin does this huge sideways move that we all know about. It went through that brutal bear market. And then we get our buy signal here on the 19th, March of 2019, and then we get stopped out in September of 2019. Then we come through. Our next breakout is here, and we sell here for a small loss. And then COVID happens, prices come screeching down. Then we buy here in April of 20, and then everybody knows about this last bull run. And then we're out in May of 21. We go through another sell-off. We buy here in August of 21. We sell here in November of 21. Again, these are smaller moves that we wouldn't get involved in. We miss a lot of downside. And then finally, in January of 23, where we're at now, this is where we're looking. You would have gotten stopped out. Well, you'd still be in this trade, and you're up about 45%. So let's go back a little bit. Let's see kind of how we fared. So our initial buy of negative 6.31. So we're in it for about 9 weeks. We pretty much had to sell the bottom here. That's kind of what happens in a trend following strategy. When price is chopping above and below your moving average, there is a chance that you do sell the bottom, but what's most important is that you get back in, and that is exactly what we did on this next run. So from October of 2015, all the way until January, the end of January of 2018, we are in this trade, and we go up 2,982%. And with that, we do kind of sell the bottom again. This is, at least in this case, it did chop sideways for a while, and when we did get involved, it was only a 2-week period, and in our 2-week period here, we lost 16.26%. And this was a very good sell, actually. We didn't have to worry about selling the bottom. We actually sold very early before the downtrend really started, and you missed a negative 55% drawdown in your account. And being able to avoid those drawdowns is really the most important thing of trend following. You're not going to sell the absolute top, you're not going to buy the absolute bottom, but what you will do is you'll maximize your gain and you'll minimize your loss by getting out when there's a change in the trend. So next we go to March of 19, and this is a very sizable return, 96%. That is more than enough to make some big money in these markets. And again, we did kind of sell the bottom here, but we missed out on a lot of the sideways chop. We tried to get re-involved back in January of 20, but that didn't work out, and we were stopped out 7 weeks later. But again, let's get rid of that for a second. Say we bought here and we would have had to hold. Instead of being down again another 55%, we were only down around 8%. So this is going to be a great way to preserve not only your trading capital but your mental capital. If you're experiencing these large drawdowns in your account, it's more than likely going to be a huge drain on your social or on your mental power. I don't know about you, but if you have any money in the markets at all, you really don't want to see go down. You had to work a long time to get this money, and why would you want to be watching yourself lose this money? It's only going to hurt your performance in the long run if you're going through these long drawdowns, so it's important to minimize your risk as much as possible. So we get stopped out, but then Bitcoin comes back strong in April of 20, and we buy here, and this is Bitcoin's latest rally. It goes up 421%, and we're stopped out before this big 25% down bar, and we missed most of this summer sideways correction. We get re-involved back at the end of the summer. This one doesn't really go too far. We only get a 5.25% return. But again, we do miss this big move down. We miss this even bigger move down from peak to trough. You're able to sidestep a 77% decline, which is incredible. Even after we sold, Bitcoin still dropped almost 70%. So we really did get out of the top, even though it doesn't look like it. You miss this huge decline, and that's exactly what we want to do with our trend following, like I said. Then Bitcoin closes substantially above the 20 back in January of 23, and this is our most recent move, and we're up 45.17%. So we looked at some of these most recent moves in Bitcoin over about the last 8 years, so let's see how we fared. So if you started with $10,000, just doing this simple trend following strategy, you would be at $3.4 million. A substantial amount of this return came from the 2015 to 2018 move, and then it was also your 2020 to 2021. But you can see, the most important thing is just minimizing those drawdowns. As long as you're able to take care of your losses, the gains are always going to be there in Bitcoin. It's a very volatile asset, and the most important thing to do is making sure that you're around to catch those moves. So always minimize those drawdowns, and always make sure that you're staying in the trend as much as you can. So that's what your account would look like with 10,000. Say you were somebody that had a little bit more capital. Maybe you could throw up 50,000 to begin with. Now you're looking at a much different return. Now you have a $50,000 initial investment turns into $17 million. That is enough to get more than what you need in this life. You'll be able to live very comfortably after your 8-year trading career, and you'll never have to work again. Now let's say you're somebody, you only had $1,000. Over those 8 years, you turned your $1,000 into $350,000. That's enough for you to buy a house with cash. That's enough for you to buy, an extremely nice house in California, and put down a 40 to 50% down payment. This is enough money to change your life, even if you started with $1,000. So that's really what I wanted to show with this simple trend following strategy. Is the most important thing to do is make sure you're buying all of the signals you're getting. Some of these were kind of scary buys. If we go back and look in this January buy. I mean, we had been down for so long. If you remember what was going on, this dump back here in November was when FTX collapsed, and everybody found out that Sam Bankman-Fried was just a fraud, and they were embezzling all of this money and siphoning it from one account to another. If you go back to the COVID crash, I mean, everybody in the world thought we were all going to die. And then Bitcoin immediately turns around and rips higher. You get these super tight closes multiple times in here. You had a lot of different buying opportunities if you wanted to, compound your returns. You could have thrown on extra. And then the same thing, after 10 straight months of going down, um, this is not a good look. What was this over here? This was an 84% decline, and that was over we'll call it a year and in about 3 months that Bitcoin was just an absolute underperformance. But the key, like I said, you have to stick with your trades. When you get these signals, you need to take them, and that's why I always follow Bitcoin, because it is so volatile. Um, the beta compared to the S&P is just huge on this one. And if you're looking to really compound your money, if you have strong risk management, you can compound your money using Bitcoin. So thanks for watching. If you have any questions, feel free to drop them in the chat below.